Happy New Year, everyone. This is Bagger, and wishing everybody a Happy New Year. It's December 30th, and we won't be doing a video tomorrow night, but we'll be back. What will be probably Thursday night, and kind of a holiday schedule here. The most important thing I want to convey to everybody, though, is we have many folks that'll be this coming year will be their anniversary year with us, and I just want to take a moment and just say to everyone, if I don't hear from you, I just assume that everything is going great. And you can always just drop me a line and just say, hey Don, everything's going fine. I'm happy as a camper. If it isn't, please know, okay? And I don't mind, if we do this more than once or twice. I know many of you have families and have other careers and other things, and life gets interrupted. Not a problem. And, if we need to revisit some issues, I am more than happy to do that. I want you to get your money's worth out of your membership, and obviously, I want you to get your money's worth out of the market so that you're here for many years to come, and also hopefully a part of a bigger dream. So don't hesitate, no matter where you are or where you think you are, and don't be you know um, whatever. Don't hesitate, and we'll take whatever time is necessary. And you can just say, hey Don, the best time for me is if we're going to need more than an hour, is on a Sunday morning. I just ask you if you could schedule it with me just a few days in advance. Say, Don, can we be available, on a Sunday morning from 8:30 to whenever, and so that I could get squared away again and get kind of caught up. The trading, I mean, the market has been, well, the last few days have been very, very nice. The market has been one directional, but it's been very, very tradable just the same. And, we continue to hone things, and, I think that I'm fairly certain that wherever you are, if you're struggling, I'm sure that we can, buff out some rough edges and get you on the right side of things. I think one of the things that you always want to give some thought to is is the size of your capital, and it may not be what you think. I don't subscribe to the school that you can't build a small account, that you have to have a large account to really get the job done. I do not subscribe to that. However, when you have a small account, you do have to start out small. So for instance, if you have a futures account that is at $2,500 or even less, you really do need to be trading the micro contracts, and working on a discipline and trying to build it up. And then even when you get to $5,000, you've got to stay very disciplined, and you've got to stay with some of the smaller leverage products, and you got to stay within yourself. You have to stay at most intraday, one mini contract. And I would say that'd be the minimum at 5,000. And you got to calculate what your misses would be, 150, maybe $180. As you see, you can't start out with an account at 2,500 and, in my view, and be trading mini contracts where you could lose $300, because just three losses cuts your trading capital in half, and then you fund it again and it's too little. And to draw an example of this, if you had $100,000 in your trading capital, you would not it would not be a good idea that you trade, $200,000 worth of intraday margin on it, okay? Because it would put you out of business fairly quickly. Okay, so give thought to getting properly sized, trading the right products for the account size that you have, and getting mechanical and getting yourself in moving in the right direction, and then building and building and building. And I firmly believe well, I know because I've done it. I've done it more than once, just to prove that it can be done, building out from a very, very small account. And so in any case, so I just kind of share that you don't want to over leverage a small account and kind of keep blowing yourself up and thinking that it's just a run of bad luck. It is about probabilities, but you gotta we gotta crawl and then walk before we run, if that is in fact the case. The other the other point that I want to make is that you don't need a ton of trades to build that confidence. We're not looking to build euphoria. We're trying to guard against euphoria, and we're trying to guard against any kind of despair. We don't want those emotions. We don't want euphoria, and we don't want despair. But all it takes is about I'm going to say 8 to 14 good trades to build the confidence, and also to build a small account and get it moving. Once you've done those 8 to 14, mechanical way, measured, and risking little to make, risking one coin to make 3 coins, and doing that, 8 to 14 trades can start a good habit, and that's about all you need. So you're just 8 to 14 trades away. But again, if you have a $2,500 account or less, and you're trying to put together 8 to 14 successful trades trading, the NASDAQ on a mini contract, you're undercapitalized. I mean, you could lose, a few $100, like I say, we won't beat a dead horse on that. All right. So again, Happy New Year to everybody. Let me know, where you are as the year gets underway. And if you need some help, please don't hesitate. I'm here for you. And but I won't intrude. We look at the Nicholas timing model, and the Nicholas did in fact go short as reported on last night on Friday, and the position today was in fact a down day, and everything is still in position, and this account would be up 2,000. We actually got to today, believe it or not, we got to $5,000. Now let's slide over here and let's take a real quick look at things. Here's the VIX. We got a risk on caution. This is the spot VIX. Are we inverted? No, we're not. We do have some moderation here and a little bit of pressure up. So the market sees something, and it sees it really, really close. So maybe, let's hope it's nothing on New Year's Eve. But you never know. You never know. SPX is still chugging along, nothing indicating there. FedEx is still short. The yield curve is still fairly steep and not inverted, and the skew has come off. We're well now underneath 140, and we're down about 130. So the complacency is creeping in again a little bit. Let's go to the daily futures and see what, if anything, we see. And everything is still pretty rosy for the bulls. We do have a little moderation on the Russell, and we have a little moderation on the Dow. The dollar is weakening. Our other currencies are strengthening against the dollar. The JNK, HYG ETFs are still long. We'd like to see those, coming off as the canary. So we're still very, very early. We can't even say that this was a pullback. We're just, market's still very, very complacent. Treasuries rallied on the short end, so that gives the bulls a little bit of gas, but nothing, nothing major. The metals are doing very, very well. Gold is very much a long right now. I'd be buying gold on every dip. I'd be buying silver on every dip, and I'd be buying copper on every dip, and maybe the gold miners. Oil is also long. I'd be buying, maybe this is, the inflation of commodities, heating oil, gasoline, so we got some prices rising, or at least the commodities are rising. And you can see it in the grains too, all along, with the exception of soybean meal. And then we come down here and we see the fibers. This is cocoa, it's short. Cotton is long. Sugar is short. Coffee is long. Coffee has really come off. Coffee, if you recall, was down around 92. Huge amounts of money could have been made off of coffee. We talked about here at 102. So from 102 to 132, it's on an $11,000 move. Please look at coffee on a chart straight up. You know, you can do really, really well. Remember, we're, for all intents and purposes, running a hedge fund. So we don't have to be just in the financials of the indices. You know, there are other markets. You know, 2 or 3 contracts in coffee make you a year, you know. And we do trade those. So, and then up we go. Let's slide over and look at the ETFs, and it's going to be pretty much the same. This is what we mean by all the financials. And you can see the biotechs are moderating, financials are moderating, regional banks are moderating, and the industrials are moderating. So that's a good sign for a bit of a pullback. And everything else is going to be pretty much the same as the futures. And then we slide over, and then up we come for support and resistance levels. Let's take a look at the S&P. We did put out a tweet not that long ago. It's actually just a few short days ago. I think it was the day after Christmas. And we did have a 2-week put on Tesla, and that got hit. I think it was aftermarket, so that's looking pretty good. Let's see who is up today. O'Reilly, NVR, Veritex, Apple, and a little bit Ross Stores. How about down? Amazon. Now Amazon, we did do a video. Feel free to take a peek at that. We've been trying to showcase what Swing Machine can do in the way of stocks because we've been getting a lot of inquiries from the stock folks, or stock twitters, and they're more comfortable trading stocks than they are futures. They're using a hell of a lot more money. They're taking on a hell of a lot more risk, but that's what they want to do. So we've been showcasing, so be sure to see some of the videos that we've made documenting the performance of Swing Machine utilizing documenting Swing Machine trading stocks using Swing Machine. And even today we had a setup on a 15-minute that we called out live in the room today on a 15-minute for Amazon, and that trade paid out over $1,000. AZO was off, Booking, Goog, iSurge, Netflix. I think Netflix is going to be running into some trouble this year, Nvidia, and you can see what was down. Now let's see what we have for picks though, so we can highlight and give you some actionable. So we got a short entry. Now these have to confirm tomorrow, but this is a good shopping list for Alexion, CE, CTSH, short, long entry, Duke Energy, defensive. eBay, looks like it's trying to generate a short here on ICE. These are some big expensive stocks. EW, what is that? Edwards Life Sciences at 232. And then UPS at 119. And then here, if you look at, you know, when we sort these are the most recent, some of the more recent trades, and some of these, you know, are underwater. You could maybe still take them in the direction you might want to go and still get a better price than Swing Machine. But, you know, by all means, give those a look. Let's go to the NASDAQ 100, and first let's see who is, here's Tesla off 18, so that's going to be a good one for us. We have a put at 430, and then Roku's coming back. Roku's probably going to be all the way back underneath 100 real soon, and then let's see who is up today in this O'Reilly, Veritex, Apple, and Apple's, you know, well, Apple is Apple, so you know, it's going to come back in, but there are other easier things to short than Apple, so I wouldn't even try to bother. So we look at the entries today. Here's some of them the same ones, but here's Roku showing up here, so that could be something decent. And then here are some of the more recent entries, you know, right up until about the last 10 days, and here they are. 8 days ago was Amazon, and that would have paid off $6,000. And something WDC long 10 days ago was up 588. So maybe these come in over the next few days. But this is a great way to get some actionable, fresh opportunities rather than playing the same old call or the same old put options and get it so that price is on your side. And I think you'll probably do a little better. Let's we can take a peek at the Pebble Beach, and here we get a whole plethora of cells here. Do we have any buys at all? And we got one AIZ. And let's just, I'm curious, I don't even know what the hell that is. I think that's Alliance. No, Assurant. It's an insurance company. Actually looks pretty good too. It looks like it's going up. But so there were quite a few cells, out of bounds markers. I'll leave that up for yourselves. We won't dig into that tonight. And then we'll just take a real quick look at the chart itself. And let's look at the SPX. And here we do have the move down. So we could get, this could be just the start. We could, finish the week with a big down candle. We could, get, a few days going here. So at least the market has turned. And in one day, we've wiped out 2 candles. And what we need to do is we get a gap in here. Let's see if we can get another 2 or 3 days. Maybe we get another gap move down tomorrow. It's difficult to do because of the seasonality of things. We're ending the quarter. We're ending the year. We got New Year's. Not a lot of people around. So it can be a little bit tough for the bears to mount a charge. I think we still could get a jailbreak though. Most likely after New Year's. God forbid if anything happens on New Year's, markets not pricing in anything unforeseen at all. Everything is just perfect in the world. And then I think certainly, next week, certainly by Tuesday afternoon, this market I think is going to be very much under pressure, and hopefully Nicholas is still short and is doing well. Now, when you look and I know everyone does this. We do this. We're human. We look back at the past year, which we did make a video on Nicholas. We're going to do a video over New Year's looking at the swing machine over the last year. And so we'll get a copy of that to you. But you may be looking back over not just the last year, but over the last 10 years and saying, boy, wish I could have, should have, bought and held. And all I can say, folks, is that don't be too hard on yourselves on that because very few people did. Very, very few. And in fact, you probably would have had to have been comatose to have done that, truly. And it would have been very, very risky. And those people that did do it, they're not coming out for anything. And if this market does go down 90%, they're going to give it all back because they have no rhyme or reason for why they were in and why they stayed in. They have no idea. And I'll just say this is that when you look at the chart, I'm not going to post the chart, over the last 10 years. I guess we might have, now this isn't even 10 years, but you've seen all these charts. And you look and you see the years before that and you see the big dips. It is not realistic. It is not, and trust me because I was there, it's not realistic to think that, okay, the next time the market goes down, I'm going to buy it. Because when the market does turn, and makes another big turn. And if it does make a big turn down, it could go down 50% and then it could go down another 50% and another 50 from there. So when the market is crescending lower, you don't know. You don't know. And I certainly came in after the dot-com and I bought a couple, some big bites, and they did play themselves out, but, I was early and really took a heat. It's a very difficult thing. And just because we've run up and up and up over the last 10 years, don't think for a minute that we necessarily have to turn and go straight down. In fact, I don't think that's going to happen. I think we may get some shocks and we may step down, but then we could wind up the market during the 60s to 70 time frame. There were about 16 years where the market established a big wide trading range and went sideways for 16 years. Okay, so that's possible. And in that sort of environment, The bulls will get frustrated, the bears will get frustrated. Anybody sitting back and waiting could be waiting and waiting until the cows come home if they think they're going to get a big crash and a big opportunity. And even if that does come, it's not to say that the market would come rushing back like it did in '09, because the only reason the market did what it did in '09 and stayed sustained is because of what the Fed did. Does the Fed have the tools? Does the Fed have the strength? Does the Fed have the confidence of the people to pull off another stunt like that? Boy, I don't know. I don't. And the thing of it is, nobody knows. And we didn't know in '09. We didn't know in 12. We didn't know in 14 and 16 and in 18, and we don't even know 19. I mean, we could tack on another 10 years, up 20% a year. Anything is possible. But you know, when you admit that, you don't know and you're at a later stage in life, it's one thing if you're only 18 and 19 starting out. But if you're in your 30s, 40s, 50s, 60s or older, and you're having to put a huge bet down, boy, it's really pretty dicey. No matter where we are, whether we're at the highs or even if we're 20% down, because just because we're 20% down doesn't mean we don't fall another 30%. And if you've just stepped in. So I guess what I'm saying is that, and I said this to everybody, that once you go through our Jumpstart program and once you get a view of the markets that we share, you'll probably never be able to look at the markets the same, and you'll probably never be able to, for good or bad, go back to what you were doing. So you can only go forward. You can only look forward. And there are beautiful ways to trade these markets in hedging and wedging. So once again, I'll close the way I started. If I can help you, or if you're stuck wherever it might be, and you just need some time, one-on-one, reach out to me. Let's schedule the time. Okay? So I want you, so that, you have a good, productive year and you feel real, real good about the investment that you've made. And it's not the investment necessarily in Swing Machine, it's the investment you've made in yourself. But in any case, all right? So with that, I wish everyone a very happy new year, a safe one. And I won't address that, anymore. Leave that up to everybody. And then over the next couple of days, we'll kind of recap what Swing Machine itself has done as best we can. We'll show you some monthly views. And then I'm going to give you a glimpse of how I'm setting up my platform. Nice and fresh, nice and, pristine. Nothing that you haven't seen before, but I'll show that. Couple of little tweaks here or there, very little tweaks, and to get started for the year ahead. All right. So with that, I'm going to say good night, good luck, and happy New Year to everybody.